We are quite very well plugged in into the global supply chain, and so that's why we see there's a lot of opportunity coming in for the region itself and definitely Malaysia. And partly because of the deglobalization that has reconfigured the supply chain, the global supply chain, and so that's where the region has come up to it to really strengthen in terms of or go into areas where we have comparative advantage. In the case of Malaysia, E&E is one of the area of our strength. And so that's where we're exploring into new areas within E&E, which has more high value added activity, like for example AI and advanced packaging and the rest, and it creates high value jobs as well. And with strong economic, domestic economic linkages.
The US election is the elephant in the room at these meetings, and there was a big story that crossed last time round when the former Malaysian Prime Minister and his delegation spent lavishly at a Trump hotel here in DC when visiting the then President Trump. So it feels as though there are some ties between Malaysia and a would-be Trump president again. But does Malaysia stand to win no matter who is elected?
Well, this is a space where we're watching very closely, and I would say that things are still very fluid. And of course, I think look in terms of what Trump has been saying, the three areas: tariff, immigration, and tax cuts. If you look at these three areas, they are basically rather inflationary. So you will see that this policy, if it's done, it could be negative in terms of for growth perspective, and it could be inflationary. But in terms of Malaysia, I would say that what's important is for us, being a small and open economy, we need to ensure that we are prepared. We need to ensure that we have all the buffers that we need to face this changing environment. So one important element is in terms of the diversification of our economy itself. So that provides some kind of like a shield in terms of making sure that we are able to absorb any kind of challenges that comes with it.
So you're somewhat wary around the US election and who could become the next president?
Well, it depends into the policy. What we are seeing now is more of rhetoric, and it depends on what actually goes into policy. For example, when we see in 2016, there's a lot of campaign rhetoric, but not everything goes into policy formulation and execution. Same thing here as well. But we are watching this very closely. And these are the three areas that I highlighted just now that we are looking at. And that could have an implication not just in Malaysia as a small and open economy, but more importantly, even on global growth.
And let me bring up China, because in recent weeks we've seen the stimulus in China, measures to try to address the local government debt, and of course the property market issues. Is this starting to make a difference in terms of supporting growth in the region, or are you hopeful in weeks and months it will make a difference?
Right. We're quite happy to see in terms of the announcement that's been made recently, but again, as what others has been saying, we have not seen the details of the announcement yet, so that's very important. But it's good to know that China is trying to grow the economy. Hopefully they could achieve a growth of around 5%. If you look in terms of the World Economic Outlook that was issued yesterday, it was downgraded to 4.8%. So perhaps I think this stimulus package could help to bring them back to 5%. But again, I think we are watching in terms of the details of the announcement by China. And another point is that I want to bring back the point that I mentioned just now about diversification. If you look in terms of China, our export to China is about 14%, not 40%, 14%. And we are quite well diversified. 12% is to the US and 27% is to the ASEAN economy. So we are quite well diversified there. So we're not reliant on any particular economy or country.
I want to ask you about interest rates in your country, because it's fascinating. The view is that you will hold out until at least 2026, which is quite a runway. I don't think we've got that much clarity on a lot of other central banks that we've been talking to. What would cause you to break out of that holding pattern?
Oh, not necessarily. We could stay until 2026 at the level of rate that we have right now, because the interest rate determination by the MPC will depend on the data that we see and the outlook that we see for balance of risk for inflation and growth. Whenever we have the MPC meeting. So this is the considerations that we have, not so much of what happened outside, but what happened outside, for example, in terms of what the Fed rate cuts or any other developments, how this will have an impact in terms of the outlook for inflation and growth in Malaysia itself. So that will be dependent on the data that we see, and we'll take it from time to time as we meet, and we'll see what will be the appropriate rate. But at this point of time, since we last increased the policy rate to 3%, it remains supportive of growth at this point of time, and it's appropriate for now.
Is it fair to say, though, higher for longer is where you're at? Is that how we think about it, or in terms of interest rates?
It's quite difficult to say, depending on the dynamics about the global economy, dynamics of the developments domestically. That could have an implication in terms of how we see inflation and growth going forward.
Just finally, can I ask you about the Fed's move? 50 basis points, rate reductions and rate hikes from the Fed can have ripple effects across emerging markets. Have you felt the 50 basis point rate reduction? Has it had a ripple effect in Malaysia?
It does have. For example, you look at the ringgit performance. Last 2 years, ringgit has depreciated quite excessively, and it's mainly due to the interest rate differential between Malaysia and, of course, the advanced economy, particularly Fed, because our policy rate is at 3% and Fed rate is at 5.5%. And the 50 basis point cut is a positive towards ringgit, because you reduce the interest rate differential between the US and also Malaysia. So that has been positive for Malaysia. But of course, there's some correction recently, given the positive numbers that's coming out from the US in terms of the resilience of the labour market, and there's uncertainty in terms of what will be the next move of the Fed.